All right, welcome to another expert interview. Love these conversations because we always find value. As the title for expert interviews says, everyone has a story worth sharing and we want to share it. Depending on where you're listening to this, please make sure you leave a review, ask questions, like, and subscribe. The more questions you ask, we can always do a part two and follow up. So with that, let's jump straight in. Branden, tell everyone who you are and what you do, bud.
Hey, Devin. Yeah, thanks for having me, man. This is really awesome. So my name is Branden Coluccio. I run a boutique management advisory firm called Relentless Ventures, and we help small business owners, so businesses typically doing between $500,000 of profit and $5 million of profit, build what I call institutional quality assets. And so we come into a company and we essentially come in as an investor would. So we approach every opportunity as if we're a private equity firm that's going to do deep diligence on the company and look for significant upside, right? And so we try to determine whether or not that's a possibility with some of our smaller clients. And if it's not, at the moment, we help them build that and turn it into an asset that we think would drive significant and attract significant acquisition multiples by a broader group of buyers. And so that's what I do. It's a tremendous amount of fun. I get to work on small businesses, and with small businesses, you have super passionate owners who love what they do. They love their businesses, they love their employees, and we get to help them build and grow and ultimately transition their business, whether that's into a cash flowing asset that's not sucking so much time out of their day, or achieving that big exit, that big 8-9 figure exit that a lot of entrepreneurs dream about. So that's what we do.
Love that, man. I love your passion for what you do. I know the first time we talked, it was awesome to hear, the creative stories you've talked about. And I was going to ask as a follow-up question, like, what mental state might someone be in where a conversation with you is relevant? I think you just mentioned kind of two triggers, right? One would be, I'm trying to figure out where to take the business in the end. Like, what's my end game? And two would be, man, it's killing me, but it is a great business. How do I turn this into a profit center? And so let's kind of go down both those paths real quick. So if you step into that business owner who's just like, hey, I know we're crushing it, we're making money, but like, I want some time back. Where do you start that conversation with them? Like, what are some things you have them think about?
So I mean, typically what we do is we try to, and so I'm a big fan of the book Rocket Fuel. And so we try to identify, that integrator and that visionary. And a lot of the time what we find is that these small business owners are trying to do both and trying to be both. And, when you're trying to be both of those things, you can only get so far. I mean, you'd be surprised how big of a business you can build doing both of those things. I run into entrepreneurs all the time who are highly successful, 10, $20 million in revenue, and they're essentially running it all themselves. So they are that visionary, and then they do enough of the integration work to be able to kind of get by. But if you really want to build a cash flowing asset, you have to look deeply into yourself and figure out which one of those you are. And so that is an exercise we go through. It's mostly a mindset exercise at first. And that really just comes down to a lot of deep questioning and talking about what it is they're doing each day and what it is they'd like to do. In some cases, we do always get as granular as having them write down like a giant list of everything that they need to get done and what they're doing. And we find ways to slowly move those things off of their plate. The biggest problem with a lot of visionaries, particularly entrepreneurs who lean towards visionary, you're never like all one or the other. Very rarely are you like a truly one or the other. You're elements of both. But one of the biggest problems is that they try to take on everything all at once. And that is usually what is stopping you from getting like really truly accelerating your growth. And so I always say you can do it all, you just can't do it all at once. And so we try to segment some of that list and focus on removing those things or shifting it towards another team member. And, so that's kind of one of the tactical things we do. Another thing that we focus on is making sure that they have that clear vision. Because really what we do is like, we're just working in reverse. So if I know that someone wants to have a $35 million exit and they need to achieve, a 5x multiple to do that. Okay, well, we got to get to, 7 million EBITDA. What does that mean? Does that mean that, we've got to triple the company? We've got to double the company? It really just depends. And so we start working backwards from that to figure out where they are today. And what does the profile of that business that sells for that multiple, what does that company look like? And we begin to kind of reverse engineer their business into that asset. And so I hope I answered your question. There's a number of different things I highlighted there, but I hope I answered your question.
Yeah, great takeaway. I love the idea of like grab a notepad, right? And keep it next to you. And if you're running a business and you're struggling with that time aspect, literally just write down everything you do. I love that. I give that advice a lot on the calendar tracking, because it's the same thing. Like, well, I'm busy. Well, like, doing what? Like what's the work you're doing? And so I think that's a phenomenal takeaway for entrepreneurs to think about, like, where is your time allocated and why? And then how can we either leverage it, outsource it, partner with it, bring a vendor in? Like, there's so many things you could do with that info. And then the end in mind, that's another great takeaway, because you're right. Like, oh, I want to have an exit. Okay, well, but like, what number? Like, what number actually is meaningful for you? And what's that look like? And then to your point, what's the business look like then? Oh, well, it's got to be hands off. You have to be able to exit. Do you want to stay on for 2 years and consult? Like, here's all these other pieces. So I think those are great, again, just things for people to think about, but really good insight into the work you're doing with people. Let's talk about that exit one. So someone comes to you and says, hey, you know that I want to transition out, right? I'm not just transitioning to cash flow. Like, I want to transition out. I want to sell. Like, where do you start with them? You talked about kind of the price points. Like, well, what's that conversation look like? And are there any things that someone could start like doing themselves now to work through that process?
So yeah, what I tend to have my own bias when I address these questions, because I've had exits on myself, and I remember the feeling of great disappointment when I exited. I was like, I just exchanged this business that I love for some numbers on my app on my phone, right? Like, that's what I just traded this business that I love for, right? Is some numbers on a screen. And so I try to explain to people that an exit isn't always a panacea. For some people, they are psyched that they have those numbers on a screen. Don't get me wrong. But for me, it left me feeling a little bit empty. And so I always like to talk to people about this. And I start the conversation with, why do you want to exit? Why? What is it that's driving you towards that conclusion? And sometimes it will be, well, I want more money, or I'm sick of this business. I hate this business. Like, I would give it away, or I have a great business. I'm ready to transition it, but I don't know how, right? So there's a different answer for each of the motivating factors that goes into why somebody would make a decision, or at least explore an exit. And so I always start with trying to understand the why. And typically it comes down to, well, I'd love to, kind of take a little money off the table. I would love to bring in some additional help. An investor not only has capital, but can also help elevate the business and bring it to the next level. Or I'm just, I'm ready to retire. And, one of the other questions I asked is, okay, well, typically there's something that's not perfect within your business. And then, they'll often go on and on. Well, yeah, well, we've got operational issues, we've got hiring issues, all the normal stuff that every business deals with. And I go, okay, well, what if we could solve those issues? Would you still want to sell your company? Right. And so what we're trying to get to, again, is just leading them down a path to try to identify what the true motivator is. Because when you do achieve that exit, whether it's for a 3x or an 8x, at the end of the day, you're going to be left with dollars. And that is going to satisfy you for a short period of time. Most people, I should say, for a short period of time. And then you're going to be looking for the next thing that is going to bring you meaning and purpose. And what a lot of people don't do is they don't think about all of that before they begin the process of exiting. Because often I find particularly with like a strong visionary type who's like a leader who uses their business as a platform to express themselves, they neglect to focus on what they're going to do next. And then when they no longer have that platform to express themselves, I've seen people go into like deep depressions. They're rich as all can be, but they are depressed. They miss their business, right? These are the types of things that actually happen that I don't think a lot of people talk about. They just focus on, so-and-so sold their company for $70 million or whatever it is. But I think that's a bit, not that that's not a big part of it, but I think it's only half the picture. And so we try to paint a true picture of why they want to go into an exit process, and then how to calculate, if it is dollars and cents, how to calculate what that might look like. Because after deal fees, taxes, the brain damage of actually going through the exit process, it's a lot less than I think people appreciate, right? A $10 million check can get whittled down to $4 or $5 million pretty fast. So anyway, that's how we approach it. Try to be holistic is the word I like to use, but that word's probably abused.
Yeah, but that what next conversation is amazing. And, I'm
Yeah.
part of a succession roundtable group, and it comes up all the time in the group.
Yeah.
Because if you've been doing it long enough, you've seen it, right? But you're right, it's not something that's talked about, I think, to the general public or in media, right? The media wants to highlight the win, but they don't talk about like, well, what is this person who's poured decades, right? Maybe into this thing doing now? Like, and so hobbies, philanthropic ventures, foundations, like really thinking through like what's meaningful to you and what are you gonna do after. So I think that's a great takeaway. If people are thinking about having an exit, really thinking about like, well, what are you going to do with your time and your expertise after? That's a cool exercise. And then you talked about this, and I want to dig in because you have had some successful exits. Like, let's talk about the numbers a little bit. What surprised you in your exits where money just disappeared? Like, what were some of those fees and things that popped up where you're just like, wait a second, like the numbers are dwindling. Like, what are some of those things that popped up for you, just to kind of give people a heads up if they're thinking about going that way?
Well, it's a story of pure embarrassment, having gone through it. And so I'm kind of like private equity trained. And when I went off and I did my entrepreneurial thing, I did what the private equity firms do. I mean, they hire the best of the best and they just kind of let them do their thing. And I was just thought that this was like the right way to do it. And when I had my own exit, one of them, I did that, and I mean, we blew, millions, literally millions of dollars on fees, and did not get what I consider a high quality product. We had probably $1.5 million in lawyer fees. We had 2 different quality of earnings, and the private equity firm made the company pay for those. So those are all things that you have to, factor in. The firm that did the one deal I'm talking about they forced us to pay a $25,000 due diligence fee. And that was like I've never heard this. And I almost refused to do it. But the board had spoken. I was just kind of like doing what I was told at that point, but I was like, I refused to pay this. But at the signing of the LOI, they were like, yeah, so you got to send us 25 grand straight out of the gate. This is something we do because we don't want to start allocating our time and resources to a deal and then have a seller back out. So like they had their argument for it, but I was like, I've never seen this in my life. This is the dumbest thing ever. And I almost blew the deal up over it because I was so mad about it. We hired like what was supposed to be the best kind of tax and wealth planning advisor. And the fee that they charged, I'm embarrassed to even tell you what it is, but it was almost 7 figures, and they did no real creative tax planning whatsoever, like none whatsoever. I could have gone to, your run-of-the-mill tax advisor, and they probably would have delivered the same result for, maybe $10,000-$25,000. I mean, that was the level of the fee. And the problem was I was sort of stuck with these groups because they had sold the executive team who had sold the board on that process. And so like, that was it. Like the decision was already made. But I mean, the fees that we paid, I mean, you'd throw up if I gave you the actual numbers. It was literally millions of dollars. And I think I probably could have got the same work, if not better, done for maybe a couple $100 grand.
Well, I love that insight too, because I think that's a part in, I've seen acquisitions and mergers and transition strategies and full out buyouts. And I think that's a part where people don't spend enough time really looking at like, who's the team around you? And I know that's something you can provide a tremendous amount of advice on because you've been there, right? And
I've made those mistakes. I'm so embarrassed by that, but it's also the reason that I hammer it so hard to sellers because it's difficult. I'm sorry to cut you off, but this is really important because as a seller, you are this is a big moment. A lot of people don't do this more than one time in their life. And so they place their trust in the people that they know the best, who are typically already, it's a relationship that has gone on for a number of years. And so when you come and tell them like, look, there is another way, but that may mean you have to use somebody else or go in a different direction, that does not go over well. And so I think that for those people who are willing to be open-minded and try to take into consideration that the objective here is to not only have an exit, but to keep as much of that as possible, and that the people that you have around the table may have different interests, right? So you just have to factor all that in, is all I'm saying. I'm not saying any of these guys are bad guys. That's a lot of the time, that's what they do. It's just their business is generating fees. And so anyway, it's just something to consider.
Well, and I think you can outgrow your vendors, right? Which is something I talk about a lot. And I think that when you're elevating in an exit, you may outgrow some of the people around you, right? Like your attorney might have been a great attorney for running your business and doing the annuals and things like that, but they might not be the best attorney at fully structuring your estate and looking at this transaction of a huge sale. Same with your CPA, right? Your CPA might be a great day-to-day tax advisor, but they may not be the person who's a wealth management person that can look at your whole estate now and go, hey, we have 50 million, what do we do with it?
Well, and the tax liability. So and I didn't know any of this at the time. The super expensive groups that we hired, like didn't tell me any of this, but there are a number of things you can do that are perfectly legal to defer or wipe out your tax liability in an exit. And so, you're in some cases, you're talking 30, 40, 50%, depends on where you live, depends on a variety of factors. But that's, depending on the deal, that's several $1 million. That's what we're talking about. And so I paid a bunch of advisors, a tremendous amount of money and still paid 7 figures in taxes. Right. So I was like, what have I done? Right. And so this is why I get so passionate with business owners, is because I'm like, look, you can't sell the business and then go get mad about the tax planning. You have to do it all way ahead of time. And some of these strategies even require that the structure be built into the original letter of intent. It's to satisfy IRS requirements, right? So you have to think about this ahead of time. It can't be a game time decision. It can't be an afterthought.
So there's a lot of ways people can get help, right? So let's have this conversation, and I'd love to hear your feedback. So they're in that moment of, hey, I'm running my business, I'm thinking of selling. Who do they talk to first, right? Like, where do you advise they go have that conversation, and why would you recommend that?
I would recommend they go talk to a business owner who has probably a few business owners. So typically guys who run businesses who are having exits have other buddies who run businesses who probably had exits. If you don't, get in contact with people who've done it and ask them very candidly, what did you screw up? I need to know what mistakes you made, etc. And try to learn from other people's experiences. And like, that's essentially what we do, right? So we bring that experienced entrepreneur who's had mistakes, who's done all this before, and who's also done it the institutional way. And I try to bring that value to people and give it like a very candid answer. And I deliberately didn't say go to your financial advisor, because most financial advisors have been financial advisors their whole life and they've never built and sold companies. Most of them. I'm sure there are plenty out there who've done it, but for the majority of them have not. And I also think approaching it from like, what mistakes did you make from that perspective? I think you'll get people to open up about some of the things that are not typically spoken about, because they're not always fun to brag about, right? Because like, for example, us paying ridiculous fees for lawyers and advisors who didn't do a damn thing. So those are the things you want to know, because you want to be able to avoid them before you enter the process. But of course, having a good deal team is very important. I would say, look for folks who are willing and able to be creative, who have a lot of transaction experience and understand what is required of a transaction. And also, I would also ask people to inquire about whether you ask a professional advisor, an MA advisor, or a buddy who's had an exit, talk to them about like the soft things that a lot of people don't mention. What were some of the things that you didn't expect? Well, I didn't expect all this. It's called deal fatigue, right? Where you're like, this deal, it died and came back 7 times in 6 months or whatever, right? That is a very emotionally challenging experience for people, for sellers and buyers. Buyers get deal fatigue too, whether it's a private equity shop or somebody else. Deals can be tough. They can be stressful. There's a lot of money on the line. Typically, there's a lot of information being exchanged and people get impatient, or people can't produce the materials that you want. There's third-party people doing all different types of diligence. In some cases, there's at least 2 law firms involved, right? So that it's like choreographing a ballet, but everybody in the ballet is like a cat, right? So it's like that you're trying to keep all this stuff organized at the same time. And it's very, very difficult to do. So like those are the things that often go overlooked as well. And so I encourage people, find people who had that experience, who are willing and open to talk about some of the not sexy stuff, like not the check that you got at the end, or what kind of boat you bought afterwards, right? Talk about the challenges that you face so that you're prepared for it mentally, emotionally, and you have a rock solid team in place before, like long before you ever enter that process.
Again, more awesome advice. And again, I love that you're speaking from experience. My recommendation is they should probably talk to you, right? But I love that.
I don't want to be,
no, but I love that you say, talk to your network, right? Go talk to people who've done it. But I love the question, right? What surprised you and what didn't work? Because that's where you get the answers, where you can save yourself time, money, emotion, all those things. And so I love that in anything. Anytime you're seeking mentorship or advice, find someone who's done it and ask them what went wrong, because that's where you're going to get the best conversation. What went right is great, right? But we want to know like what broke or what surprised you. And to your point, deal fatigue. I have a client right now, I think they're on like the third or fourth close date this transaction. And like, it's so interesting because I'll check in with them and like, I'm not doing my part until they close because I'm helping them on the next phase. And so it's like, I just check in on my update and they're like, all right, next close date's the end of February. And like, cool, it'll close when it closes, but
it's all part of the journey, man. That's how it goes. The buyers are always, it's always funny. They're like, look, we'll close in 90 days, cash, no problem. I've seen that happen one time, and it was with an enormous, like extremely well-funded, big multi-billion-dollar shop. And they actually did close it in 90 days. But most of the time it takes like 6 months or 9 months or a year, right? It's just the way it goes.
Love that. So let's talk about data rooms. This will be a good snippet. Let's not get too deep, just a quick overview, right? So when you're going to sell your business, there is usually some stuff you should have ready. What's the kind of hit list people need to kind of think about that they're going to need to have access to in order to actually sell a business?
Well, I mean, it typically the process will begin with the sharing of financial information, right? So once you're through, LOI and all that stuff, and before that, right? So when you enter an NDA with a potential buyer, you're going to share financials, and usually like a buyer will look for, you can always tell like the state of things to come by seeing the initial financials when those come over. And so there's a lesson in this, right? And so a buyer, and having done this kind of been on both sides of it, I used to say, like, be able to tell, okay, it's going to be a nightmare to get due diligence materials from this company, or these guys seem very well organized. This could actually go well. But most of the time, and like, I don't think I've been wrong on this once, but let's just say most of the time, so I'm not overly general. It's never the buyer's fault if things go slow. Almost never. It's almost always the seller because they're not prepared. And it starts with not having quality financial statements. If you are a company and you're doing, I don't know, I'll say $5 million of revenue or more, just get audited financial statements. Just do it, right? Yeah, I know it's expensive, the whole thing, just do it. The amount of trust and the way that your first impression of a buyer, the appearance, the initial appearance, is so much better when you get a set of audited financial statements, particularly if you have like the last 3 years and they're done timely. Man, that just looks so good straight out of the gate. So that's typically request number one is financials. If you have audited financials, great. If not, get them reviewed. That's like the slightly less expensive version and still presents nicely. If you are above that, like you've got to have audited financials, in my opinion. But also you got to be able to present your internal financials, have them ready in Excel, because typically your buyers are going to be doing some kind of financial modeling or forecasting. I hate it when people send me PDF P&Ls. It drives me absolutely crazy. And then it takes me another week to get the Excel versions, because the Excel versions don't, blow out of QuickBooks right, or whatever the problem is, right? Just have it ready. Then you got to have all three financial statements ready: balance sheet, cash flow, P&L. Have all that stuff ready to go. I would say, kind of the challenge, it depends on the business, but like if you've got significant contracts, whether that's with vendors or customers, it's nice to have those things ready to go. because the hesitancy of a lot of sellers is that they just don't want to share that information that early. And I understand that. So typically I'll tell people to just redact the names. So you could do a nice thing, get ahead of it, and have all those things already redacted, right? So if there's information that you're a little bit sensitive about, have it prepared so that you're not burning another week or two going back and redacting all the information. So that's another one. Any major kind of leases or anything like that, understanding your customer concentration is very important. Again, this varies by business. So if you have an e-commerce business, that's probably not going to be that relevant. But if you have an industrial services company and you have 4 clients, right? Like that might be an issue. Also having all of your kind of vendor, if there is vendor concentration, having a list of, alternative vendors, that's another really good thing that kind of looks nice. I'm not saying you necessarily have to go with those people, but having that prepared. And then also I would say having a really solid forecast. So when you are selling a business, you're selling an opportunity. And I think a lot of sellers approach it I think incorrectly, maybe it's just the way I'm wired, but I love to leave a little meat on the bone for the next guy, right? You have to do that. You want to do that. That's just good business. And so having all those opportunities clearly articulated, whether it's in a document or in a really beautiful financial model, if you really want to knock a private equity buyer's socks off, build a gorgeous financial model, let them nerd out on that for a while, that will present very well, right? So having all of that information ready to go, those are typically the things that I look for right away. But then, of course, you're going to get into, leases and, human resources and employee agreements and, all the other stuff as well. Systems, you probably have a list of all the, IT infrastructure and all that stuff. So there's a lot that goes into a data room. And one of the things that we do with our clients is basically a year before we're going to enter a process, we build our own data room. So it's all ready to go. All the information is there. The financials are super tight, and all that ancillary crap, the insurance policies and just all that other stuff that you have to have, the box ticking items, I like to call them, they're just there, right? And they have a place where they live, and that's their home. And so every time there's a new document, that's where it lives. It goes in its home, and then we just share that information with the inquiring party. So again, being prepared long before you enter the process instead of starting to get prepared when you enter the process, which I think is a lot of mistake M&A advisors make. The good ones don't, but some of the smaller ones do.
Again, I appreciate your insight there. It's just, I tried so hard not to laugh at some of the things
you can laugh.
Because I've seen them, man. I remember a buddy of mine was looking at a business, and they ask for financials, right? The guy wants to sell, and he gets the financials, and they're all handwritten. And
that's a good one.
And you're just sitting there cool, I can't even get lending to acquire your business. That's not gonna work. But I also love, if we boil this down to something that's actionable today, is have your stuff organized, right? And timely. And it's really important because sometimes you can't dictate when a transition has to happen. And I think we don't plan like that either, right? We've been talking about proactive sales in this conversation, right? We're meaningfully trying to sell a business, but sometimes a business has to transition. And you need to think of it the same way, right? You're going to get the least amount of value if someone steps in and it's just chaos, right? You can't find anything. There's no storage systems. There's no documents. So have it all organized and here's where we keep our policies. Here's where we keep our employee agreements. Hey, here's our bookkeeper, our CPA, our financials are done. Our financials are done by this date every year. These are all such good advice as you're scaling a business, and it will protect you should something bad happen too.
Yeah. I mean, all of this stuff should be done no matter what. I don't care if you're entering an exit process tomorrow or 10 years from now, you should have all this stuff, right? It's doing it the right way. It's a lot of the work that we do with our clients. And so that's my, and I'll vent for a moment, but one of the things that really frustrates me when I talk to people is well, and I'll ask, do you have any prospective clients? Do you have interest in potentially, exiting your business at some point? I don't say when, and I'm saying a year or 10 years, it's at some point. We're not really interested. We're not considering exiting. Okay, fine. But at some point, to what you're saying, Devin, you're going to have to go through an exit process or a transition process. Maybe exit's not the best word, whether you want to or not, right? Crazy things can happen. People die, people get sick, marital issues, you name it, right? And you may have to run a quick process on your deal. And the less organized you are, the less likely you are to be able to execute a transaction at all, let alone at the value you'd like to have, right? So again, just keeping your business organized at all times and being exit ready, we'll call it, is just the right way to do it. It's just the right way to run the company.
Love that. So let's talk about your story a little bit. I always like to ask the question, if you look back on your journey, what's something you would tell your younger self, or what's a lesson you learned?
How many lessons do I have to share? Be cautious of the people whom you trust, particularly the ones you trust most deeply, because that's often a more emotional connection than it is a logical connection. And sometimes so I firmly believe that all people are good people. Maybe not all people are good people, but most people are good people. I'll say that. And I tend to give folks the benefit of the doubt a lot. And this comes from business partners to the advisors that I've hired to people that I have decided to work with. And that has not always turned out to be the case. But then I get hurt because I'm like, well, I thought you were good. But really, that's just an expectation that I put on them, right, of myself. And so I would say just be measured in your approach to your interaction with people. And if somebody's not being brutally honest with you, that's usually an indication that they have a different motive or maybe just a different incentive. And so I always look for people who are willing to hit me like right between the eyes with it. And those are the people that I tend to enjoy working with. But I've learned a lot of those lessons like the hard way, like the really hard way. I've had some things go really well and some things go really wrong. And, I attribute it to just, not being probably too emotionally invested in that relationship instead of just thinking logically about, about what it is we're trying to achieve and making sure that we have mutual alignment.
Yes, I can, ditto that. But it is true. And I love that you share that, because I think anyone who's had partners or done transactions or deals or had like really high level employees, even
Sure.
like sometimes we make those emotional decisions, or I like to say the path of least resistance, right? Like it's easy and it's working and it's great. And like you're high on this energy, but like you didn't take the time to actually slow down and go like, well, wait a second. Like, what's everyone's motive? What's their goals? What are they trying to accomplish? Who are they? How are they communicating? And so I appreciate that feedback. I think there's a lot of lessons for people to learn there.
There's one other thing. Can I add what I've learned and what I ignored in my younger life is the feeling you get right about here, like right in your like the diaphragm area, I guess it is, and it's that feeling you're like, I don't think this is going to work. And what you do is you go, oh, it's fine. It's going to work. It's right. We'll be fine. And you try to Band-Aid it and Band-Aid it and Band-Aid it. And then 6 months goes by and it blows up. Just cut it off, right? Like right there, there's something in your gut that is telling you like, look, this isn't going to work or something's not right. Don't sweep that under the rug. Like I've done that so many times, and every single time I do that, I end up going back and going, I knew it. Like I knew this wasn't going to work, right? Like why was I kidding myself? So sometimes I can be criticized for being a little bit overly direct, but that's why, because I have to, because otherwise I'm truly a very soft person. And so if I'm not overly direct and to the point, I end up getting that emotional investment in the relationship, and I end up making decisions that aren't always best for the business or for myself. So anyway, that was what I wanted to add to that.
Again, yeah, another great takeaway and a lesson learned, right? Something that you can relate to, but people could probably slow down and relate to that as well. So let's talk books. You mentioned one book already. Rocket Fuel is a great recommendation. I'll second that. Any book recommendations?
So I think the one, I mean, I've read so many books, they all like kind of just get shoved together, I think, at this point. But there's this book called The Outsiders. I don't know if you've read it, but it is basically the stories of these uncommon CEOs or lesser well-known CEOs and how they have like significantly outperformed guys like Jack Welch, right? So like you have all these big names that come to mind, and you read this book and it talks about all the different things that they did and how they came into power and what different things they focused on. And these are like, you've never heard of probably any of these people. And so that I thought was one of the best books. I've read that book probably 3 or 4 times. That's a fantastic one. I highly recommend that one.
I'm gonna have to check it out. it's funny doing podcasts, right? Because we schedule them however they show up. And on my last podcast, that was the book recommendation.
Oh, then I got another one.
I'd never heard of it. No, so I love that though, because a second endorsement like that, it's funny how much that happens, right? Because I can't predict what someone's going to say with the answer, but it's funny. We had that happen with a history book too. I recorded 2 podcasts and both were this random history book I'd never heard of.
Okay, so then another one would be the book by Steve Schwarzman. What's that? What It Takes, I think it's called. Look, yeah, I think it's What It Takes by Steve Schwarzman. So he's the founder of Blackstone. The guy is he's just an absolute monster. Another one that I remember was a book about turnarounds. Who Says Elephants Can't Dance? It was a book about the turnaround of IBM.
Perfect.
So
well, I appreciate the extra ones.
Yeah, I can't, like, if you're given the same one twice in a row, I got to give you something else. But those other 2 are really, really good stories as well.
Well, I appreciate that. Yeah, I'm gonna have to check that other book out because it's good when it's recommended a few times. So what's the best way for people to connect with you? If they want to dig into these conversations more, how should they reach out to you?
Yeah, so my website for our firm is relentlessventures.io. But people can email me. It's Branden, BRANDEN @relentlessventures.io. That's probably the best way.
Awesome, man. Hey, is there anything we haven't covered today that you want to just leave people with? Any nuggets, any topics we missed?
No, I don't have any like pearls of wisdom. I'm all out of fuel, I guess. I probably just shared everything I had with you. So look, I mean, if there's anybody who wants to have a conversation about any of this stuff, I'd love to chat about it whenever, and be more than happy to be helpful if I can.
Well, Branden, I appreciate you making the time, brother. You shared a lot of wisdom in here. This is definitely going to be one of those episodes people are going to listen to a few times, especially if they're trying to exit plan. So thanks, man. I appreciate you.
Yeah. All right. Thanks, Devin.